Roller coaster for sure. Okay, so today's lesson is going to be a psychological lesson, and it's going to be on the idea of have, well, as you guys can see, right? Have, do, be versus do, be, have. So this is, I'm going to explain this. Versus do, be, have. This is what we're doing today. Let me put this all in one line. And this is a psychological framework that I utilize, right? That I utilized to become, I think, a profitable trader. This was one of the biggest differentiating factors in my mindset as I was developing. Okay, we have 15 people here. What I wanted to do as well quickly before we do this lesson is I wanted to quickly review today's price action as well if you guys want to, so I can post both and not have to record a separate video. So what we'll do is we'll quickly hop into this chart, spend about 10 minutes reviewing this price action of what happened today, and then we'll hop right into the psychology lecture, just so I can kill two birds with one stone and not have to record a new lecture for today's review. So let's talk about what we saw in the market today. There's only one major thing I wanted to go over, which is why I wanted to do a lecture, which was this piece of price action in the morning and why I knew today was a likely long day as opposed to a high quality or high caliber short day. So as we know about market cycles, right? So the topic of this like market review is going to be market cycles based. Okay. So as we know about market cycles, we can kind of identify how the price delivery continuum, or IPDA, delivered the past 2 days, or the past week really, okay? So let's start off by looking, first of all, at how the weekly candle opened. So as you can see, the weekly candle here, we'll draw out a little box to note that, right? Monday opened, and immediately we expanded higher for Monday, Tuesday, and Wednesday. Now the dynamics of this weekly candle by Wednesday, oh, I'm not sharing. Thank you very much for telling me that. Eyes looking beautiful. Yeah, I forgot that I wasn't sharing. Okay, so the dynamics of this weekly candle began with an open and a high being formed in the week. Now, as you know, this weekly candle prints up until Thursday looking something like this then. Okay, excuse my art, it's not fantastic, but you get the gist. This is the weekly candle going in to our Thursday CPI folder. Now, as we know, when we see very little manipulation of a weekly candle, and we're talking about very small amounts of wick being formed in here, right? Very small wick. We are likely to see something called a Thursday reversal, or in this case, a consolidation reversal. And we had the candidate for this reversal by seeing the way Monday, Tuesday, and Wednesday printed. So as you can see, we had this imbalance, right, from last week on the daily chart that was not traded into. We left it as a swing failure on the Friday. Okay, right in here. Now, Monday, Tuesday, Wednesday expands higher, creating a consolidated range that is never purged. So we never manipulate this Monday range, which I'll mark out with this box. And you can see we also add consolidations on both Tuesday and Wednesday. Now this Tuesday consolidation is purged, and this Wednesday is a very choppy day before we expand at 12 p.m. in the PM session. This entire profile here and the associated swing failures of this market, right, make this a very, very high confluence Thursday reversal profile, which we talked about. We were all expecting it, right? We all went into Thursday expecting to see some run on liquidity and reversal lower. Now, what I want to pay attention to in specific for this recap is I want you to draw your eye to this piece of price action in here and this piece of price action down here. And I want you to make note of the similarities that you see in price delivery. These aren't random ways that price delivers from external ranges back into the range or seeking opposing liquidity. This right here is a function of market cycles. So as you can see, so far in the week, we have something that looks like this, right? Monday, Tuesday, Wednesday, right? So we have Monday, Tuesday, Wednesday, and then we had this Thursday candle that looks like this, right? And then we had a Friday candle that looks like this. This is the weekly profile. Monday, right? Tuesday, trying to make this more symmetric. Wednesday, Thursday, Friday. So some people in here might be saying, okay, well, today was an obvious TGIF type of setup, right? Because we reached our weekly objective, which was maybe delivering back into this imbalance, and we could look for something like this. Well, would you look at that? Look where the weekly candle closes, right at that TGIF setup. But Afiz, I thought TGIF setups were only on classic buy weeks. Not true. A TGIF setup presents when the Thursday meets the weekly objective. Whether that's a classic buy week that looks like this, Monday, Tuesday, Wednesday, Thursday, Friday. That's also another classic buy week, right? Can look like this. So that also has a TGIF candidate. So it doesn't matter when these weekly objectives are met, right? So it doesn't matter what day the profile forms on. If the weekly objective is met by the Thursday, whether or not it's a consolidation reversal, a Wednesday reversal, if we get this Thursday meeting the draw, Friday is likely to close back within the range. And as you can see here on the ES, so we had that move higher today all the way into previous day high, and NASDAQ closes right at that TGIF range during the PM session, which was very interesting to see. That was something I barely even noticed this afternoon. But I hope while I've been yapping, you've had the time to review the question I asked you, which was, what are the similarities in these two price legs as it relates to market cycles? Someone give me an answer. Purge of liquidity, then attack the opposing side. Consolidation, manipulation. High impact news, took both sides. AMD. Good, I like these responses. Yeah, when we consider market cycles, let's consider the phase of delivery in here through each of these steps. So in this leg, we have an accumulation, followed by an expansion, followed by a retracement, followed by an expansion, retracement, expansion, accumulation. Perfect. All of this is permissible, right? Expansion, retracement, expansion, retracement, and then expansion into a consolidated range. All of this is by the book, continuation of market cycle. Now, if we want to reverse at this level up here, there is a prerequisite for a reversal. And this is why yesterday I traded long, irrespective of my idea that I wanted to see price trade lower on the Thursday. I knew that CPI would offer a long candidate, because in order to have a reversal in the market, we need two things. All reversals contain an SMT and a higher time frame array. We know that. What we also know is that any reversal is impossible from what? Accumulation, expansion, retracement. Which one is it impossible from? 1, 2, or 3? 1, 1, 1. Nice. You guys have all seen the last lecture. So I know right off the bat, I'm not going to get a reversal from this accumulation. Well, this in here is an expansion into an accumulation. It's not, right? It's not, I'll say it, an expansion into a reversal into an accumulation, because that can trade lower. This is simply an expansion, no reversal. Why? No SMT up here and no higher time frame array. So we don't have these two conditions. And we also don't get any shift in delivery state or structure that's bearish. So up here, right, there is no higher time frame array. This is all-time highs. And we also have no SMT. All of this up here is all all-time highs. and no SMT up here. So I already know we're not going to be reversing from this accumulated box. Okay, let me also close some of these tabs so my thing stops lagging so hard. God, it's really laggy. Okay, that's better. So in this box, I know we're not going to be reversing. So what I see is that once the market forms this accumulation, there's only two options for us at this point in the market cycle. And that is going to be a bullish continuation, AMD continuation. So again, right, on Thursday, we expect a reversal based on weekly profiles. And that's based on the idea that Monday through Wednesday expanded, leaving very little manipulation below the weekly open. Okay. For this reversal, there is only one market cycle approved, I'll put it in quotes, mechanism. Or you could say permissible. This is going to be an AMD reversal. Okay? If we want to reverse, we need to see an AMD reversal. If we were to continue, if we were to have a classic buy week, which we did not expect, but could have happened, there is also only one market cycle mechanism. And this is an AMD continuation. So by nature of the fact that we have come from an expansion into a consolidation, I already know the market will do one of two things, and that is it. And I have a high probability case, right? Thesis, and I have a lower probability case or thesis. The high probability case is the AMD reversal. Accumulation followed by my two criteria needed to reverse, right? SMT at a higher time frame PD array, and reversal. Accumulation, deviation of the range with SMT, distribution lower. Okay? That's what we got here with the YM. All right, you can see YM's nowhere near its all-time high, so we need to see another spike up, first of all, and another SMT put in. So let's go right here. You'll see that's where it happens, right here. Okay. Now, you might be saying, well, you know, the YM has been decoupled the entire time, so we want to see a different form of SMT. Fair enough, right? There will be a lower time frame SMT in here as well, contained within this reversal. On a lower time frame, it'll look something like this between the ES and NASDAQ as well. So the ES or the NASDAQ, well, one of them will make a higher high, and one of them will make a lower high, and we'll get an SMT that looks like this as well in that leg. Most certainly, if we are reversing. But both ways, we know that there needs to be an accumulation, a deviation in order pairing of the range high for it to go lower. If it wants to go higher, there needs to be an accumulation, a deviation of a range low into an imbalance or something like this, and then it will continue to trade higher and we'll continue to see bullish prices. At this point, because I know that the only option for this 8:30 news is to first seek buy-side liquidity, the trade thesis for longs, irrespective of whether I'm bearish or bullish on the daily candle, is going to be long. That is why I longed before CPI even dropped, because I had the structure that confirmed it on my hourly chart. So in here, you can see, what did I have? The same two things I said for the bearish case. I had my SMT that formed at CPI. Remember I said on stream, we're going to see the SMT form on the Newswick. And then we get involved in that SMT and we drive price into the high. We don't know where it's going to stop. I used previous day high and buy-side liquidity as my target. Perfect. This is an AMD reversal with higher time frame array and SMT. This is the reversal from this accumulation. Accumulation, manipulation, short-term retracement is a higher time frame retracement is a lower time frame reversal. There's the SMT, and boom, right? Each phase of market delivery, it begins and ends with a smart money technique. Fantastic. So now, whoa, my trading view is completely lagged out. There we go. So now that I have that, I now can see how price trades alongside the weekly expectation, right, which is going to be a consolidation reversal, and price leaves our nice little consolidation box using AMD reversal, AMDR, okay? and this is an AMDC. These are two terms I use all the time, because we get markets that look like this all the time. Look, study this. If price wants to trade lower, it must deviate this high with SMT. It must. If it does not deviate this high with SMT, it will not trade lower. Go in on the YM and prove it to yourself that there was an SMT at those highs. If price wants to trade higher out of this accumulation, there must be SMT at these lows. There must be an AMD continuation. Once we put in an expansion leg in the market and start to accumulate, oops, I picked the wrong thing. I should have used my drawer. Once we put an expansion leg in the market and start to accumulate, the only way to move higher is AMDC, right? AMD, and this is all part of a continuation pattern. And if we want to reverse, there needs to be an AMDR, which means there will be an SMT and some sort of PD array up here. Okay? That's the foundation of market cycles. The market won't change. It will always do this. It's a function of order pairing. There needs to be order pairing, and there needs to be an SMT crack in the correlation, and accumulations do not reverse. So expansions can reverse, which is why you see wicks on the higher time frame, because on the lower time frame, I can assure you this looks like this. I don't need to even see it on the lower time frame. This looks like this. It's candle body up, candle body down. It's not a wick, it's two bodies right in here. I can prove that to you by just filtering down a time frame. There you go. This is no longer an accumulation reversing. This is A into expansion, and the expansion is a form of manipulation. Remember, manipulation is just another word for expansion. What type of expansion is manipulation, right? The question becomes. Manipulation is expansion opposing the draw, right? Distribution is expansion in the direction of the draw. I spelt every single word here wrong. Sorry about that. That is what types of expansion are. Manipulation, distribution. Both are expansion nonetheless. So in here you can see we form our AMD, right? Reversal using very, very basic market cycle concepts, but nonetheless incredibly powerful. Not understanding this would leave you questioning why I'm comfortable longing the CPI candle here for 80 points when I'm clearly bearish on the day. I am bearish on the day, right? This is my high probability profile. Doesn't matter. Market's not reversing out of this. If it goes lower, it'll trade higher. If it goes higher, it can then trade lower. If we were to do this, what we would do is we double purge. This is a manipulation. This is the range high that is yet to be purged. We'll purge that. We'll pair it with these lows. And this is where you'll get something that looks like this. And you see that all the time as well. This is what we know to be sell stops, buy stops, sell stops. This is a double purge. It's when the market performs a different protocol, which is not an AMD reversal, but it's a double manipulation or a double purge, right? Accumulated range, take the sell stops, take the buy stops, take the sell stops. Because we need to purge this range high with SMT. It needs to happen. Once the accumulation happens, you will not get reversal. And you can prove it to yourself, and I don't need to prove this to you. This won't happen. This doesn't happen. This is not permissible in the market. And if it does happen, it's an anomaly. It's not the normal, it's an anomaly. Maybe manual intervention, maybe there was a bomb, maybe some news dropped that I wasn't aware of, right? Something happened that was a manual intervention because price doesn't book that way. It's inefficient for liquidity distribution. You need to pair the buy stops with a sell stop objective. Okay, that's what that piece of price action looks like. So obviously, now we can say what happened down here. Well, price did exactly what we expected it to do yesterday. Sold off into our point of interest. But it didn't hit that PD array yet, did it? Here are our sell stops. So again, another case study. The market this morning, as my mentorship stream knows, and the guys in premium, hopefully Gabe was able to pick up on this, did not trade in to sell side liquidity yet. So it had failed to make the run into its liquidity objective. So the market here has reversed. So let's look at the market cycles again. Accumulation, expansion, accumulation, expansion, retracement, expansion, accumulation, expansion, reversal, change in the state of delivery. Look where price comes directly back into today. The change in the state of delivery, right? Okay, cool. So expansion, right? Accumulation, expansion, reversal, accumulation. Let me draw it out cleaner. Okay, so now once we've reversed, what we cannot do from this accumulation is what? What can we not do in here? What's not permissible for price to do? Reverse, right? Reverse, go down is absolutely permissible, right? We can go down and trade lower because what is the phase of market delivery here? Is it bullish or bearish? What cycle are we in? A bearish continuation or a bullish retracement? What do we say this thing right here was called? Changing the delivery state, right? So now we are in a bearish displacement, or in this case, a bearish expansion. So a bearish expansion, right, cannot change its state of delivery from an accumulation. Simple enough. Okay, so now we start to accumulate. So look at the similarities. I mean, this is a beautiful case study for market cycles, and I'm really glad today printed this way because I wanted to show you guys this, which is why I'm taking aside from our, our psychology lecture, because the similarities here are identical on both sides of the market. If we want to trade higher, here's the question, and it's no longer written on the screen. What is the only way we can trade higher? AMD continuation or AMD reversal? I mean, obviously, in this case. Manipulate. So is it going to be an A? Is it going to be here? One is AMD reversal. One is AMD continuation. If we want to trade higher, which one? One or two, guys? AMDR, 1, perfect. You guys can see that the market wants to reach into this dealing range, which I have marked out. I also have to flip the order so you can see premium and discount like this. If the market wants to reach up into a premium of the market, i.e. reverse from a bearish distribution into a bullish retracement on the lower time frame. Remember, a higher time frame retracement is a lower time frame reversal. This must perform an AMDR type of move. Perfect. So now going into news, I already know what to expect. What can happen? Say we want to trade lower. The market will always do this first. Okay? If we want to trade lower, we can have accumulation, right? Distribution, retracement, expansion, or we can have accumulation, manipulation, distribution, retracement, expansion. Both of these are the case where the market goes lower, okay? So it doesn't need to purge these highs to continue lower. Market can easily go from expansion into accumulation into expansion. It can also go from expansion into accumulation into manipulation into distribution. So the market here has a choice. If it wants to go, right, lower, it's permissible for the market to do this. That's fine. This is just A into D. Right? There doesn't need to be a manipulation. Now, obviously, you prefer there to be a manipulation to go lower. However, if the market is going to trade higher on the day, there's only one option. It's AMD, meaning I come into this 8:30 news with an understanding that if I have no bias, so I'm saying price could either reach into this liquidity here. Here's the powerful part, guys. Listen closely. If price wants to reach into here, or if price wants to reach up into here, right? Either of those two areas. All I have to do is study the nature by which this consolidation is broken. Remember, if we do this, A, expansion, retracement, expansion, I know to target here. Now, if we do this, what do you think I'm going to do? If the market goes higher first, what is the only direction I trade in? Someone tell me, long or short. So here I trade, obviously, short, because this is accumulation into distribution, into retracement, into distribution. Perfectly permissible. It doesn't have to manipulate the highs if we're continuing. Remember, continuing of trend. Bearish trend, bearish trend. Short. Park got, yeah, AZ. It's not going to be long because if the market trades higher first, what would this be? Is the market allowed to go from an accumulation into a reversal? Yes or no? Everyone say it in chat. This is not the easiest topic, which is why I wanted to spend time in the video talking about this. That would be manipulation. So short. Yes, yes, perfect. So the market is not allowed to move like this. Off the bearish trend. Remember, this is the trend. This is the direction of the trend now. So if we see a move from news that moves this accumulated range higher, the obvious draw for me all day is going to be what? Sell side liquidity. Notice how we have a failure swing then if we didn't trade lower. So now I trade lower into sell side liquidity objectives. Really easy kind of trade for me, right? Just like up here. Very similar, but in this case we're getting a full reversal from the bullish trend. Okay. If we purge lower first, what direction am I looking for? Well, it could be either, right? It could be this. It could be short expansion and then another leg short. But once we get what did my students see me look for this morning? A change in the state of delivery. Yes, which is what happened on the ES right in here. Right? It happened on the NASDAQ right in here. Once this happens, the draw on liquidity is now higher. Now I know this is an AMD reversal, which is a higher time frame retracement. That's why the price doesn't need to come all the way into this high like it does on ES, but I can at least seek premium of the range. So if you were at my mentorship stream this morning, we talked about this. So this is the target then, right? The draw on liquidity for me, and this SIST is the refined level of that draw on liquidity. If we get a AMD reversal, so expansion, accumulation, manipulation, change in state of delivery is going to be here. Distribution, fantastic. Now I know to look for longs and no longer look to short this gap. This gap is not in premium. So we're holding for this gap potentially. And I actually decided to end up longing the ES because it was so much stronger, but it doesn't matter. If we had gotten something that looks like this, I would not be expecting this move higher to last and sustain. I would be acting as that for manipulation and then look to trade into sell side liquidity. So the way in which we trade out of consolidated ranges is extremely, extremely important. Price cannot reverse from accumulation. If we want to reverse, it must be AMDR, right? And if we are continuing, it will often AMDC. Now, it doesn't have to AMD continue. Remember, the market is allowed to expand, accumulate, expand. It's allowed to. But it is very often that the market will expand, accumulate, manipulate, expand. That's why it's called an AMD continuation. But if you're reversing, there must be a run on the lows and an AMDR. There must be if it's a reversal. So if the market does not run sell side liquidity first, it will not reverse. If it did this, whoops, if it did this, right, accumulated, then ran higher, we know that's untrusting of longs, and to then fade that move, trade against it, and look for shorts. But because we ran sell side first, we now look for trading long the rest of the day, which we all did for the most part, right? And I did it on the ES. So I hope you guys understand the small nuance of that. I wanted to do a market review on it because it's really, really good case study. It's how price reacts to consolidated ranges, and it really shows you that for a trend to reverse, you need to see certain things. And for me, I'm so confident in this concept, I have no problem, as you guys saw, my students saw, at least in the mentorship stream, I have no problem longing this low. I got involved right here in price. Right? So my first TP was like 80 points or something right off the bat because my entry was so favorable because I knew that once we swept this low, this was likely to be the low of the day, right? And then I actually ended up taking my position off because ES looked stronger and NASDAQ looked weaker, but it doesn't matter. The fact is this market cycle is an AMD reversal, and up here we had an AMD reversal as well. Two beautiful examples of AMD reversals of the market where trend has changed delivery state through consolidation. I'll say that again. Trend is changing delivery state, not like this. This happens all the time. How many times have you guys seen this? A smart money reversal that looks like this, right? It's just trading into a higher time frame key level, SMT, and then reversal, right? Maybe a balanced price range. But this is changing delivery state through consolidation, expanding, consolidating, now getting the AMD reversal, AMD. Then what we're doing is expanding, consolidating, and then doing once again another AMD reversal. So we're not just doing this, right, which is an inverse head and shoulders. We're actually changing state of delivery through consolidation ranges. And these are the best types of trades. These are the trades we love to see because we know with high degrees of certainty, for example, CPI, if we're bearish, going to be a bullish candle. CPI, if we're bullish, might be a bearish candle, right? And because I had a bearish bias for the day, I'm very happy with trading that long, which is a powerful statement to say that even if I'm wrong about my bias, right, and the day is bullish, we're going to expand here first. Right? Either we're going to do a MD continuation or a MD. Both ways, I can take a trade into this area, into these highs. They will be taken. Likewise, down here, if I'm bearish, right, I wait and I want to target these lows. If I see the move higher, good, I target the lows. If I see the lows get swept, good, I target the highs. It's a way to trade ranges when expecting reversals, and this is also known as the box setup, right? Take one side of the range, target the other. But there's a reason why the box setup, right? This is the box setup. There's a reason why these setups actually work, and it's to do with market cycles and the way in which price has to leave ranges with order pairing. It must do this every time. Okay. How late to the lecture am I? Not that late. We just talked about market cycles and why the market did this thing, Rob. We're putting this AMD reversal on Thursday, right, for the weekly profile, targeting the weekly open. And then it also put in the AMD reversal today. And we're talking exactly about how to anticipate the formation of that index distribution candle. Because if you're, like today, for example, a very clear bullish bias. The minute we did this sweep, I'm no longer looking for shorts. And I even told all my students, we're not coming down here today. Nope. It's unlikely to come down here today if we take this sell side first. Because this accumulation, right, would have much rather seen a purge of the highs and then generate liquidity to move lower. Again, order pairing buy stops with sell stops. Instead, we order pair sell stops with premium buy stops. Likewise here, if we want to trade higher, I want to see a run, lower, sharp move, and then trade higher. If we want to trade lower, I want to see what? Sharp move higher, then lower. AMDX reversal. XAMD, right? That move higher that I traded is a signal, right, or a early signal that price will end up reversing because it's already paired to the highs and now it has all of these targets. Okay, it's a really, really powerful concept, and it just comes down to the end, the one statement that price cannot reverse from an accumulation. But you have to understand this is more than just a statement. This is just a generally broad statement. What we're talking about here is very specific. This is about market cycles. And if you understand the trend, the prevailing trend here, bullish. Meaning, we want to reverse. There's only one way to reverse. One way. Once we accumulate. If we didn't accumulate, we could also do this, right? You've seen this all the time, where we don't put an accumulation here. We just have a smart money reversal with an SMT. But once the accumulation goes in, one thing can happen if you want to reverse. Just one. Not two, just one. It has to be a run on this high first. There must. Same with down here. Price could have done this. Inverse head and shoulders. But it didn't. It traded lower, then consolidated. Good. Now if it wants to reverse, one possible outcome to reverse. This. If it does this, I'm shorting down here, right? Now it could be a double purge, which is another form of higher time frame reversal pattern. Look, sell stops, buy stops, sell stops. Doesn't matter because I'm only trading this fractal. And I know today is going to be a long day the minute this low gets taken first. Because if there's any other outcome after this low gets taken, right, and we do not close through it, there is no other outcome. There's not going to be an A, or an AD retracement D. It's not going to be this because you can see we wick the low. So the minute this wick starts to get formed, I know the target is premium. Right? Okay. Very, very, very powerful stuff. Something I wish I understood a lot better when I started trading because it allows me to take news trades. Like I just explained to you how I trade news. Same here. When I trade this 10 a.m. news, what do I see in this? Like, look. Okay, I want to go lower. Well, wait. For what? We're now here, and we want to perform a short-term retracement, which is a higher time frame retracement, which is a lower time frame reversal. It's a sell model. Wait for the high to be purged. Boom. Now I know the high is being purged. Now I know I can target the low. If the low gets purged first, where am I targeting? The high. Right? Anytime an accumulation of the market gets established, wait, right? Use the thesis that price cannot reverse. So we're not going lower without first purging these highs. So these highs are your target. Even if you want to come down here, say you thought Monday would form the high of the week. Great. We form an accumulation. It will no longer do this. Price will no longer do this. So now you know you have a target. So you trade on Monday to where? These highs. Even if you're bearish, you trade to those highs because it must take these highs before it trades lower. Then same thing. You're bearish on Tuesday. Okay, maybe Tuesday high of the week. Fantastic. 9 a.m.'s right here. When the market has shown you this accumulation from this expansion leg and you want to go short, this high has to be ran. It must be ran. You cannot short before it's ran or an SMT forms there. It will not reverse. Okay, now it takes it. Now we can reverse lower time or higher time frame retracement. Okay. Same thing here, right? Same thing here. Look. What's the trend? Bullish trend. What do you see the market do? Expand, accumulate, and then pull lower. That's not possible. The market can't reverse. The market cannot do this. So that's manipulation. So what do? Target the highs, right? AMD. And then you can see how the highs are the draw on liquidity. We won't just keep trading lower from here, right? You can do this. You could do this. Remember, you can expand, accumulate, expand. This is called a bull flag, right? You've seen this in your retail books. That's a bull flag. That's permissible. That's just a continuation pattern. But what you can't do is this. A failed bull flag, right, is when you have a bearish trend. So when ICT taught it, it's something that looks like this, right? Good, that can fail. This bull flag can fail because what's the trend, guys? The trend is bearish. But a bull flag in a bullish trend can't do this. It can't. It won't. It'll do this. Or it'll form SMT. Go in and backtest it. I promise you. A failed bull flag will only happen when price does this. That's fine. Because this is bearish trend. So all this is expansion, retracement, accumulation, expansion. Whereas this here, if this went and did this, That breaks the market cycle. It needs to do this. There we go. Now we can trade into this low. But when you see that form, you see no SMTs at these highs, and you see this huge wick, what do you target? That high. That's the order paired high. That's the objective. That is going to be traded to. Not the lows, but the highs, because the trend is bullish. And I could find you 1,000 examples. Look, you want to reverse into this inefficiency right here. Right? This puts in equal lows, probably forms an SMT with the ES. Or the YM. Forms an SMT right here with the YM. You want to trade into this gap? Fantastic. The only way you're trading into this gap once you put in this accumulation, right, is either going to be manipulation, distribution, long. So like this. There's only two ways that this gap will be interacted with once you see the accumulation. You know it. So it's either going to be this. Great. I'm going to trade long. Or, great. I'm going to trade short into it. The only two ways we get interaction with the gap is if we get a purge of the highs, then we come lower, or if we get a purge of the lows into the gap and then we trade higher. And as you can see in this case, what do we get? Both. Double purge, right? Accumulation range, take the sell stops, then take the buy stop, or take the sell stop, the buy stops, then take the sell stops with SMT, then run the buy stops. This is why double purge works. It's a function of a market cycle, right? It's the idea that this accumulation, so say you want to go higher, run the highs, but it still has the objective of the low, right? It doesn't want to leave this low before going higher, but it can't just trade higher first. So what it's going to do, it's going to induce more liquidity, trade higher, trade lower, trade higher. Accumulation, manipulation, distribution, all inside of a what? Accumulation, manipulation, distribution. Higher time frame, lower time frame. That's a double purge. Same thing, right? Lower time frame fractal right in here, and the higher time frame is A, M, D. So it's this happening inside of this. Sorry, it's crazy everywhere, but it's really powerful stuff. I can find you 100 examples, right? You want to trade lower. Okay, great. What's the trend here? Bullish. We want to trade lower. I want to come back into these lows. The draw on liquidity, you know what, is this low. Fantastic. We cannot trade into this low like this. It cannot do this. It can't do it. So what will need to happen once that accumulation is put in? You can see it. Here is no accumulation. We're expanding. Now we're chopping. Great. We're either going to do two things here. You already know those two things. Lower, higher, or higher, lower. So how do you trade this? Well, say you have a bias. Look, Friday, classic expansion week. Oh, I'm bearish. Why? Because this is capping the weekly range. So what's the news folder going to do? It's going to go higher first. You can't go like this on the news. So the news will do this if it wants to trade lower on the day. First, take the highs. Okay? Here's an example of where we don't have a consolidation. We have the other type of thing, which I call an inverse head and shoulders, right? Trades lower, puts in a head and shoulders, and just trades higher. Look, no accumulation in this range. Right here, kind of some chop, but this is more so just a fake. This is more so just a retracement, or expansion, reversal. So this is how price moves from a reversal using just a retracement, expansion, reversal. Look at that. Inverse head and shoulders versus very different characteristic, which is an accumulation reversal. Two types. First type in your journal is going to be this. What's this called? Inverse head and shoulders. Or expansion, retracement, expansion, reversal. Expansion, retracement, expansion, reversal. Or expansion, accumulation, manipulation, reversal. Two types of reversal patterns. Market only does those two things. Right? Here's another one. What type is this, guys? Is this expansion reversal or is this expansion accumulation reversal? Someone tell me right in here. Someone tell me, which type is this? Is this an expansion, accumulation, manipulation, distribution, or is this an expansion reversal? Accumulation reversal? Yeah, I can see an argument for a small accumulation in here, but I would actually call this, Ash, I would say it is this. On this hourly chart, look, all expansion into a reversal. Do you see that? This is a V shape. This looks like a wick on a 4-hour chart. So this is a type 2, right? And head and shoulders kind of thing. Right? Whereas this is very different here because we have this unique consolidation. We don't have a lot of consolidation up here. This is all just pretty much one state of delivery, then a reversal, right? Remember this Thursday? We all remember this Thursday, right? Okay. So there's two types of reversal patterns in the market. We didn't have the psychology lecture yet. I got into a large tangent about market cycles because I was doing a daily review, Todd, and I thought it was very important because we saw the same things on Thursday and Friday. And this is one of the concepts that I really wish I understood earlier because it's how I trade. It's literally one of the main confluences I use. Look, what am I, bullish? Good. What's the trend? Bullish. So when the trend is bullish, I cannot go from expansion into an accumulation. Right? This move right here cannot be the reversal. Do you guys see that? We cannot reverse from this without first running the highs. So that's why this move, if it's lower first, wouldn't happen. It has to be higher first. This is another form of double purge because the trend is still bullish. But even if you wanted to get short into this inefficiency, it's not going to happen before this high gets ran. Because look, expansion, accumulation, manipulation, then distribution lower. You guys can go in your charts and find a million examples. What kind of reversal is this, guys? Is this an accumulation reversal or is this a type 1 reversal where it's expansion into expansion? Which one is this? Expansion into expansion or expansion into accumulation, into manipulation, into expansion? Which one? This or this? Type 1, right? Everyone can see it. V-shaped recovery, type 1. V-shaped recovery, inverse head and shoulders, balanced price range, whatever you want to call it, 2022 model. That's one type of reversal you'll see all the time, right? Another type is this. As you can notice in here, look. What is the trend, guys? Here. And then I promise I'll do the psychology lecture, but this is so powerful. This is pretty much like one of the most important topics that I've done lectures on with my students, and my best ones understand this very well. It's how you can take trades on news. Is this possible to reverse? Let's see if there's an SMT at these lows, first of all. Okay. No SMTs at the lows. Right? ES takes the low, NASDAQ takes the low. Let's not even look at YM because they've been decoupled for a while. Is there SMT at these lows? No. So is it possible for price to do this, guys? Remember the two types of reversals we talked about. Can price go from a bearish expansion into an accumulation into a reversal? No, it cannot. So this here is an obvious inducement of liquidity. This can't go from expansion into an accumulation, even if there's no SMT at these lows, right? This low is swept, but there's no SMT at that level, right? So this move higher is going to come lower into what's the higher time frame objective. Look what we're actually inducing, guys. There we go. There's the higher time frame objective. So let's see how price plays out. Oops, let me get rid of all this. How do I? There we go. Right? Oh, look at that. Manipulation, distribution against it. A, M, D. Continuation or reversal, guys? Which one? AMD continuation, AMD reversal. How is price delivering into this low? Continuation, right? AMD continuation. What's the trend? Bullish or bearish? Bearish. So we're using AMD to deliver to the next level. That's why when we understand the trend and where the draw on liquidity is, right? Say we didn't know the draw on liquidity was here, which is a very clear and obvious draw on liquidity, but say you don't. This is inducing, the same counterparty, right? The same longs that want to target all of this LRLR don't realize that the market has simply went, right, from an expansion into an accumulation with no SMT, right? No SMT at the lows. into an expansion. I don't like that. I want to see if it wants to reverse an SMT and ideally a higher time frame PD array, not so close to the sell side. But this looks like a really nice AMD continuation, right? This is how we go from one leg to another leg. We induce the side of the market that we want to trade against. So that's a continuation pattern, right? And we'll do one more, last one. Let me choose a really good, here's a perfect one. There we go. What kind of reversal is this, guys? Type 1 or type 2? Remember, type 1 is this, or it's this, right? And then type 2 is this. Type 1, type 1, type 1. Everyone sees it? Everyone can see type 1? AMD or balanced price range, 2022 model, head and shoulders. You can call it whatever you want. This type of trading reversal is very different than this one. And that's not the focus of today's price action, which we saw, because this looks nothing like the past 2 days. This in here is a completely different type of reversal, all on its own. What is this? Expansion, retracement, expansion, reversal, retracement, expansion. What's down here? What type of reversal is this, guys? Same one. Look, here's a week where we have 2 of the type 1 reversals. Compare that. Okay, here, I'm going to take a screenshot. Here are 2 type 1 reversals. Okay, type 1 reversals. Now let's look at this week. What type of reversals do we have this week? Type 1 or type 2? What are these? There we go. Do you see the power in differentiating what's happening? Most people don't even care. They're just saying the market's topping out somewhere. Oh, look, a reversal. Oh, look, we reversed. Oh, great, there must be a PD or SMT. Yeah, that's the simple way of learning. But the more nuanced way of understanding price delivery is that there is a way in which price reverses. It's not just you reach a level and then price dumps because, selling, because a SIBI or because there's an old high. It's the way in which you sell off that is so important. This sell-off here is a dramatic and emphatic because you've order paired the highs here, right? You've accumulated it and then distributed both sides of the range. Manipulated the high, distributed the low. Whereas back here, right, in that other example we just have regular ass reversals in the market, which happen all the time. Look, 2 type 1 reversals, right? Expansion, retracement, expansion, reversal, expansion, retracement, expansion, reversal, retracement, expansion. What type of this? Boom, boom, balanced price range. Look at that. Right there, you can see the balanced price range in here. And on a lower time frame, there's going to be a change in the state of delivery above that candle, the order block, right? On the lower time frame. Then again, we start to accumulate, move higher, chop higher, and then eventually we run out the high with SMT. Okay? Another type of type 1 reversal. And then I want you to go in and study in between how price reacts when it wants to make a leg lower to retrace. Look, price wants to retrace in here. Good. Accumulation, manipulation lower. It's not going to. Look. Where is the same price? Okay. Can price reverse from this level right here, guys? Look at the power of what you're studying. I'm not just speaking. This is really important. Can price reverse here? Yes or no? Everyone, I need way more answers. Can price reverse here? Don't look right. You're spoiling it for yourself if you look right. Use just the information I've given you in the past hour. Can price reverse here? No. Why can it reverse there? Wait, yeah, Diawi said yes. Why can it reverse? What are the 2 qualifications we need from... So, if a consolidation is to reverse, right, we need AMD reversal. The trend here is bullish. Have we reached a higher time frame PD array with SMT, and have we purged the highs of this consolidation? Well, first of all, we've left a failure swing here, and we have not formed any SMT in the market. The YM's down here, it also didn't form SMT. So no SMT at this PD array, right? And the market is coming off of an expansion into a consolidation. So the market cycle is, let's do it piece by piece from here, right in this point. Expansion, retracement. Expansion, reversal. Retracement, expansion, right? Retracement. Then we have another short, higher low. Then we have a reversal. So bullish trend when we close through. The reason why they call this an early market structure shift is because you're invalidating this bearish order flow. So this is a reversal of the trend. And then after we get a reversal of the trend, we have an accumulation. This accumulation has not performed an AMD reversal. It has not done that because it has not tagged the area of higher time frame liquidity, nor has it created an SMT. So in my mind, this consolidation cannot reverse. This short-term high, I'm not talking about this intra-hourly purge right here. I'm considering all of these candles to be a consolidation, not just these three and then the purge. So I'm not talking about this as a purge. I'm saying all of this is a higher time frame consolidation. Once we break down, we've left the target, higher time frame array, and there's no SMT on any of the indices. I'm still targeting this high. When I trade, this is not a reversal. This is not a market structure shift for me. I mean, say it closed below. It doesn't actually close below. It just barely closes above. If it closes below here, it's not a market structure for me. This is not a market structure shift. This is not a SysD. This is a fake break of structure because we need to form SMT at the high because you have accumulation here, expansion in the form of reversal, retracement, expansion, SMT forms right here. Now we have what? Reversal. How do I know we have reversal? Change the state of delivery. Okay, reversal, accumulation. Right? So now this accumulation can break down. I have the two criteria needed. Higher time frame array, SMT. Reversal. Now we have retracement and accumulation here. See that? Reversal, accumulation, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion. Again, back to this area. Have we reached the higher time frame draw with SMT? No, we haven't. Here's the higher time frame draw. Right? Okay, fantastic. Keep going. Let's look at the ES. I want to make sure you guys can see there's no SMT at the low yet. Let me find the low. Where's the low? Oh, maybe we did have SMT at the low. Ooh. Did we get a reversal from ES off the low? No, we didn't. Okay, so ES trade below that low, but there's no reversal in the market yet. We've sort of come into this bearish premium array. We haven't reversed from this yet. No invalidation of any of this bearish order flow. So no there is SMT at these lows, but there's no reversal of the weaker market. So let's see if there's any lower drawn liquidity. Sure. We can say we have this drawn liquidity as well. Okay, so then we have another accumulation. If ES had given a more bullish reaction out of here, like for example, it had closed through this premium array, then potentially, yeah, we could consider this to be an SMT. Okay, expansion, accumulation, distribution. Now look at that. Now look at this right here. This price leg right in here. That's where we get both the SMT at our higher time frame PD array, right, which is going to be this. There's the SMT. There's the type 1 reversal that we talked about. We don't need an accumulation to reverse here. We're just simply reversing. Okay. Balanced price range. And now again, once we reverse here, look. Good examples right here on the ES, okay? Let's look at the draw on liquidity for the... The draw on liquidity for the buy side of the curve. Let's just mark out the obvious draw on liquidity on the ES is these highs, right? Up in here, failure swings. And the obvious draw on liquidity on the NASDAQ is this high. Okay, once we put in this accumulation range, you can see it on the ES and NASDAQ right in here. Accumulation. Accumulation. We don't expect to reverse from this accumulation, right? Without taking out the significant liquidity. So this here is a retracement. That's fine. Accumulation, right here. Retracement, expansion, retracement. No reversals yet. This is not, remember, this is not our market structure shift. I think you guys all remember this week of us trading. This was 2 weeks ago, where we said this should be the low of the week because this was a weekly imbalance in here. Okay, so reversal, retracement, expansion, retracement, expansion, retracement, expansion. Now look, accumulation above the liquidity. Can we just reverse? No, we probably need to run out more premium liquidity. Well, where do we need to run out if we want to go lower? Well, at least probably this high. And then you can see we tap it, we don't break the range low, we continue to accumulate, expand, accumulate here, expand, retrace, expand. So you guys can see that every time we look at these expansions on any time frame, if we just see a breakdown of the expansion, there should be an SMT right here. Perfect. Now this is what the YMA, we talked about this on Thursday. If we ever see a sharp breakdown, right, or a move against the main trend, right, that doesn't fit the higher time frame order flow, that's how we can assume something is a manipulation, okay? All right. That was really, really long, but I hope you guys can see that the two types of reversal patterns that look something like this, right, and how I use them. So this is our IPTA Market Cycles lecture, again, for premium, even though I've done one already, okay? Okay, let me quickly look and see if there's any questions. The continuation of this is recorded. Can you show an AMDX example? Yep, AMDX is the same thing we're talking about, where X is just the next leg, right? So X is whatever happens next. So say, for example, we have accumulation, manipulation, distribution. X can be a retracement back into the range. X can be another consolidation, or X can be a reversal. So all of these things in here can be X. We're looking for what happens after the AMD. Okay, there is, X just means whatever next. Retracement, reversal, consolidation. How does this correlate to London protraction? It correlates to London protraction in the way that if you have a London profile that consolidates, that means that sets the ground for New York to either form the low and then the reversal, or to purge the high and then continue with the trend. So for example, if the trend is bearish and London starts doing this, if New York does this, you go short. The trend is bearish and London does this, and then there's a higher time frame PD array and New York does this, then you go long. Like today you went long, yesterday you went short. It depends on what happens inside of this consolidation and where the higher time frame draws are. In this case, it was bearish reversal. In this case, it was a bullish reversal because we hit the higher time frame right here, and of course because the weekly profile in this case. So it's not the easiest topic. There's a lot of complexity to it that took me lots of time to understand, but it's something I think is very important nonetheless. I am recording it, yeah, and the whole thing was recorded. So now let's quickly touch on the psychology part of this lesson, which we'll only do for probably 30 minutes because we don't have a lot of time, is have do be versus do be have. So in general, and for this I'll probably just turn off my stream and I will talk to you guys face to face. So in general, as a trader and as a person in life, I noticed that the most tangible changes for me came in trading and in life is when I embraced this mindset, which is very different than the normal mindset we are accustomed and trained to have, which is have, do, be. And I'll give you an example. Sometimes we think, right, for anything, not just trading, that once we have a certain set of, things, assets, any sort of state of being or any sort of possession that will be able to embody a type of behavior that makes us the person we want to be. So the best example, right, is once I have a great job and once I have lots of money, I will be able to, spend more time with my family. Once I have, this fast car and once I'm able to drive it, I will be someone who is happy, right? And I won't be so sad. Once I have my university degree, right, then I will be able, right, to do these things. I'll be able to get a job because I have my degree. And once I have my degree and get my job and I become all these things, then I will be successful. You hear it all the time. And people end up structuring their lives and their decisions such that what they want, right, is the end goal, but also the catalyst for change. Say that again. What they want is the end goal, but it's also the catalyst of change to get them to that goal. So it's a repeating circle of disappointment and contempt with your current situation. What you end up saying in the context of a profitable trader is, once I have money, right, I will be able to prove to myself that I can do this, and then that will make me, or I will be, a profitable trader. Once I have, right, a series of rules and systems and discipline and model, then I will be able to trade every day and make money, and that will make me a profitable day trader. Now, the problem with that statement of saying once you have the end goal thing, once you have the discipline, once you have the money, once you have the model, is that those things are almost always the things that require an incredible amount of change and personal growth to achieve. Think about it. Once you have the university degree, right? Okay. To get that university degree, how much goes into that piece of paper? It's not just you get the degree and then you'll be able to do all these things and be this great person. To get that degree in the first place, if that's your only principal focus and driver for becoming someone, right, is getting this thing, the years in which you spend working towards that thing are going to be so much less fruitful in terms of your own personal satisfaction, but also in terms of your productivity and your overall success in reaching that end goal. Instead, if we restructure this statement to do, be, have, it really changes the paradigm, not just of trading, but in any goal you want to achieve. The best example I give my students, right, is the statement, fake it till you make it. So a lot of times people will say, like, I want to go to the gym this year. I want to get really fit. And you say, like, well, what's the reason for that? You're like, oh, I want to have washboard abs. I want to be able to go to the beach and take my shirt off. I want to be super healthy and have, all of this, have all the benefits of being a healthy person. Okay. And then what's the reality of people going to the gym? Well, January 1st rolls around and gyms make a lot of money on new memberships because of New Year's resolutions. And then by March, about 80% of those memberships, have never been used, or they've been used a handful of times, and they're locked into a yearly contract, and people stop going to the gym. Why? Well, because what people want to have by going to the gym, the washboard abs, the physique, the social status, all of the benefits of having, good health and good habits in the gym, they don't get right away. You don't get those things that you want to have. You have to work for them, and it doesn't feel rewarding because the abs don't come before all of the work required to get them. But you keep saying, well, once I have my abs, I'll be able to go to the beach and I'll be able to do all these things and be this person who, super fit and everyone looks up to and sees the pinnacle of health. It's not effective because the reward, right, which is the thing that you're chasing, is also the thing that's motivating you to even show up. And the problem is that the end goal is so far away. The thing that you want to have is so far away that if that's the thing that motivates you, it's almost always out of reach. And that's why people can live lives of great dissatisfaction, because they want to have something to be someone. I want to have $1 million so I can be a better person for my family, or I can be, a high status person. But the better, thought, the better way to think, and I guess psychological tool, is to think, well, what kind of person do I want to be such that if I become that person, I will have everything I want? Let's say it again. You can say, I want to have $1 million. Okay, we all want to have $1 million. Or you can say, I want to be the type of person who makes $1 million. Now, those two things are surprisingly different in your approach. Because if you want to have $1 million, what do? Well, you might start trading, risking a lot of money, over leveraging, buying into accounts without having skill, trading for money, trading for status and glory and euphoria because you want to have the money. But what if you traded to be the person who makes money in the market? Well, who is that person? Let's draw that person up as an image in our head. What does a profitable trader do? Who are they? Meaning, how do they act and what do they be on a daily basis? So let's break down the what do they do and what do they be? Because you and I already know what they have. I can show you what I have. If I showed you my bank account, that shouldn't make you think anything more of my character, but it will, because what you think is in terms of what I have, not what I do, right? And not what I have been, and not what I be every day. What you see in me and what you see in trading profitably is the idea of having something. But that have is only the consequence of everything you are and everything you do. And this is where the statement, fake it till you make it, comes in, because there isn't such a thing as having money, right? Because you're a profitable trader. There is such a thing as embodying the characteristics, behaviors, and habits of a profitable trader. And then eventually there will come a point in time where the person you are right now, like AZ, Rob, Sam, Eddie, Cassie, DTC, Ash, people I'm looking at in the chat, the people you are and the profitable trader you want to be are virtually indistinguishable in those first two categories. What are those first two categories? What you do and who you are, your being. Now, here's a thought exercise, and I've done this with my students, and I call it a scorecard. If I wrote down the behaviors of myself on the chart and the behaviors of you on the chart, and all I did was anonymize the names, you could probably tell just from those behaviors who was profitable. Now, that's a weird statement when you think about it, right? Because the behaviors of you and the behaviors of me, really, without us seeing the number, like the dollar figure that we made in the year, for a lot of people, they wouldn't care about. They'd be like, well, I don't care what this guy does. But then you realize as a trader, of course that matters. Like, let's look at some common things. Am I the type of trader who averages down to a losing position? Is that something you do? Remember, we're not starting with the have, do, be. We're going to start with the do and the be, and the have we're already establishing, okay? Remember, in the back of your head, you already know the have is profitable trading and money. You have it in the end. So let's start with the do's. So what do we do? What do I do? What do you do when we're in a losing position? What do I do? What do you do when you're looking at risk management? What do I do? What do you do when it comes to trading your edge and only your edge? What do I do? What do you do when it comes to studying? When it comes to reading about psychology? When it comes to sleeping? When it comes to journaling my trades? Build the list of behaviors that you think a profitable trader would do. So this is the idea of faking it till you make it. If you want to be a healthy person, right? You can say, yeah, well, every athlete, right, is ripped, has six-pack and great muscles. Okay, sure, that's what they have. But what do? They go to the gym 3 to 4 times a week. They eat healthy and they count their macros. They drink a lot of water. They get a lot of sleep. They prioritize their mental health and social lives as well, because your social health and your mental health makes a huge difference on your physical health. But that's not as sexy as just saying, oh yeah, but I want to have, six-pack abs and, 30-inch biceps. Yeah, of course you want to have that, but that's not what they are, right? That's just the outcome of all of the things they do every day, the small habits, like going to the gym, getting rest, drinking water, counting their macros, getting sleep, the stuff that has nothing to do with those washboard abs, has nothing to do with their muscles. And the things I do as a trader, journaling, sticking to my risk rules, studying, investing in my education, all the things that I did that have nothing to do with how much money I make in the market. Those are the things I do. Okay, what about B? What kind of person do you want to be? Do you want to be the type of person, right, who has all this money, right, and made all this money trading and doesn't do anything productive with it besides, spend it on superficial things? Or do you want to be the person, right, who uses that money, whatever your end goal, whatever your have is, for some, better purpose? Well, what you'll find is that if you actually start to be that person without the money, you'll actually be working closer and you'll be working harder to achieve that end goal than you ever have been in the past while focusing on the money. What does that mean? Okay, so I want to be the person who can spend more time with my family because I have the money. So start by spending more time with your family now. But I don't have the money yet. That's okay. The have comes last. You're building the set of behaviors, characteristics, and habits of the person who has the thing that you so desperately want. Because what do we always say? Time off the charts is equally as important. Hyper obsessing about your TA and your learning is actually causing you to take steps backwards in your journey. So do the things and be the person that you want to be now, and the have will come. So if I made a generic list right now of behaviors of profitability, and then I put, Ellis here on this list, and I put me here on this list, you would be able to see who's profitable without ever looking at our P&L. You would say, oh, the guy who doesn't average down is probably profitable. The guy who doesn't revenge trade, profitable. The guy who risks, 3% versus the guy who risks 10%. The guy who journals his trades. The guy who sleeps 8 hours for the market open. The guy who takes time out of the charts every day to walk, to do something else, to focus his priorities on different parts of his life and live a well-rounded life. You would say, well, that person's profitable. And you'd be right. But you would never see the amount of money that person made. It would just be the behaviors and characteristics. Because, like I said, there will come a point in time where the person you are right now, right? Mo. The person Mo is right now. And the person he wants to be in behavior, in be and do, are identical. Well, then what do you think he'll have? Like I said, if you do all of the things that healthy person in the gym is doing, but you don't just take pictures of your abs every day and hyper focus on that washboard set of abs, what do you think you'll get? It's not a coincidence that every Olympic swimmer has a six-pack ab. Is it? It's not a coincidence they all have washboard abs, is it? You think that those Olympic swimmers go to the gym to get washboard abs? No. They emulate the behaviors of Olympic swimmers. What do Olympic swimmers do? Work out a lot. Focus on nutrition a lot. The consequence they have is just simply the byproduct of what they do and who they are. It's not what their goal is. Their goal is to build the systems and the rest will follow. Build it and everything will happen and come around it. You will have the foundation to have the things that you are deserving based on what you've done. But if you continue to chase what you do not have, you glorify what you do not have, and you say, once I have these things, I will be, you've already lost. I'm telling you, once you have money, you won't be happy. But if you are happy, right, you won't care about having money, and then maybe you'll get money. Maybe a happy, hardworking person gets money and that's something they have. But if you make the basis of your happiness contingent on your money, saying, once I have the car, the girl, right, the house, the no debt, I'm going to be all these things. It's not going to happen. No one ever had to become. No one ever had something, and because they had something, they became someone else. No. Like, a really smart person, right, didn't say, once I'm super rich and successful, I'm going to do good for the world with my intelligence. No, what they did is these people started by doing and being that hyper intelligent, world changing person. And what do those hyper intelligent, world changing people tend to get? A lot of money, fame, accolades, social status, whatever. That's the consequence of them doing the actions every single day and showing up and being that person. So what I would ask you guys is that when you step into a trading environment or just in your life in general, do you always say when I get this thing, something inside me is going to fundamentally change and I'm going to be able to do all these things? Well, I challenge you to actually question that and say, are you able to do it now? Do you need to have these things to do things? Right? You don't have to have, do, be. You can do, be, and then you can get, and you will have by nature of the doing and the being. One of my examples in trading, it's a very simple one, right? You can say, well, once I have a large portfolio, I'm going to risk a lot less because I know profitable traders don't risk too much, but I don't have enough capital to risk such a little amount. Why are you saying that? What are you trying to have or get, right? Then that you don't have the access to do now. Well, your argument is if I only trade 1% of my account and my account's $1,000, I'm gonna make no money. But you're already recognizing that what you're doing that for, right? Why you're over leveraging is because you don't have something. I don't have the portfolio size I want. So what if you just tried this? What if you said, well, what does the person with $1 million in their portfolio do? Well, they risk 1%. So you do it. Okay, what else do they do? They maybe only take a couple trades a week, so you do it. What does the profitable trader making $100,000 a year do? Do that. Do you think a profitable trader who's been doing this successfully ever deviates from their trading model? No. But you say to yourself, well, once I have a certain amount of buffer, then I won't take any other trades. Once I get a bit of a buffer and I do this, do all these actions to get all these things, and I have this, then I'll act a different way, right? Will you? How many of you guys have said, I will trade my PA different than I got this eval? I have. Hundreds of times. Once I have the PA, I won't over leverage. Once I have the PA, I won't gamble. Once I have the PA, I'll take one trade a day. Once I have the PA, I will change my ways. No, I didn't. Nope. Once I had the PA, I blew the PA because I was not someone who deserved in behavior, in action, to be a person to have a PA. I'll say that again. Once I had the PA, I wasn't the person who deserved to make money from it because I was not doing the things I needed to do in the first place to have that PA. Have you passed an eval account by YOLOing? Have you traded in a way that is fundamentally risky, right? But you say, now that I'm funded, it won't happen again. Well, I can look into each and every one of you, and myself included, and say that's bullshit. It's bullshit. When you become the person who is deserving of the thing you want to have, the have is not even why you do it. Say it again. Once you become the person who does the things and is the person who is entitled and deserves the thing that they have, the have isn't even why they show up anymore. I don't show up to the charts every day to make money anymore. I show up to the charts every day because it's something I've done and I've built a good habit around, and I have a community and I have students and I have responsibility, and it puts food on the table, but not anymore is it for me to just have money. The money is the consequence of me showing up and doing and being the person who is a profitable trader. It's why all of you guys are sitting here listening to me talk. It's because you guys can see in me something that you want in yourself, but I'm telling you, you're looking at me for the wrong reason in a lot of cases. You're looking at me for what I have, but you're not looking at me for what I've done or what I do or who I am or how I act. But I'm telling you that if you did, then you and I would be indistinguishable, and so too would our haves. And neither of us would even have to know what the other person has. I could look at you and say, you have it, because you are it. A person who does the work, who is the person who deserves the thing, will get the thing. I know that sounds confusing, but it's fake it till you make it. There's a reason why 90% of millionaires own property and 100% of billionaires own residential, like commercial real estate. Do you think that every single person who owns or commercial real estate said, once I have commercial real estate, I will be a billionaire? No. They acted in a way in running their businesses and generating wealth such that by the time they were billionaires, they all had commercial real estate because that was the natural place to put money when you have that much of it. But so many people say, well, once I have my home and once I have my car and once I pay this off, I'll be set, I'll change my ways. No, you won't. Maybe start by saying, what does the person who owns, their home do? Well, maybe they don't eat out all their meals. They save a bit. Maybe they get they don't put so much into their home that they're indebted to their mortgage forever, right? They have other assets. What does a person who is financially free do? Don't say once you're financially free, you're going to do these things. You're not, right? Like once you have money, you're not going to spend a third of your paycheck on fucking challenges or clothes or fucking whatever, shopping. Well, then don't do it now, right? You need to become the person and emulate the behaviors and the characteristics of those who have, and you will have it too. And I'm not talking about sitting there manifesting, wealth, manifesting your life. I'm talking about taking action. It's not about dreaming. It's not about theorizing. It's about waking up and saying, I'm not there yet, not because I don't have it, but because I'm not doing it. Change your mindset, right? So go in every day and say, what do I, like right now you can ask yourself, and you all think like this because 90% of people think like this, like what don't I have? Why are you here? You want to make money. I get it. You don't have money. But you can wake up every single morning and say, okay, I don't have money. What is that going to do for you? Tell me, honestly, what is that going to do for you? It's probably going to make you act and be and do things that are going to keep you in that situation because you've been in that situation. You've always not had money, in the markets, for example. Maybe a lot of you have your own money in different ways, I don't know. But you haven't had consistent profits in the market. So what changes by you saying that? Whereas instead you could say, well, what can I do? And who can I be? That's different. And then maybe, just put some faith in what I'm saying to you and the have might come. Put aside all thought of a timeline. Put aside all thought of how much money you're going to make. Put aside all thought of where you think you should be in terms of your things that you have. And instead ask yourself where you think you should be in terms of what you do. Who you are, the things that you do, and how you act. It changes everything because you'll slowly realize, or you'll quickly realize, that you might not be deserving of these haves that you want. And I'm not saying you don't deserve it because you're a bad person. I'm just saying, the person that you are right now has not acted in a way thus far that will give them the things they want. And when you change that perception of your own action, or lack thereof, inaction, the things will come. I promise you, right? If you want to get some, a lot of people here are younger. I know a lot of my students kind of are in university. Some of them are in high school. Everyone here has been to university or high school. If you wanted to get straight A's, thinking that you're gonna just showing up to class and being like, I want to get straight A's. I want to get straight A's. I have to get an A. I have to pass this course. How far did that get you? I have to get an A. Great. You need an A. I have to get good grades. Great, you need good grades. I have to pass this exam to get into the next program so I can get into this. Okay, you have to. So what are you gonna do? Well, then eventually, once you realize you have to get the A, what do you actually start doing? If you got the A, what did you actually start doing, guys? Everyone in here has done something impressive with their lives. I don't care how old you are, how young you are. You've done something worth something. You've done something that like you gave a damn about, and you got something out of it. But I'm asking you to all reflect internally on how you got that thing that you have. So say, for example, one of my students, her name's Mo, and I also know Plainview, is a pilot. Okay? You have something that 99% of the world would have no idea what it took to get to that level, to be able to fly a plane. And you could say your whole life, well, once I have my commercial pilot license, I'll be able to fly and travel and do all that. And great, all these things are just ideas of wants and haves that you have in the future. What did you actually do? What did you do, Plainview? Those behaviors that you did to get the thing that you have are transferable. But the specific things that you showed up for yourself and the behaviors and habits you built to become a pilot, that's what got you the pilot. It wasn't just sitting there saying, I need to have this pilot's license. It wasn't. You know for a fact, right? We have a rental agent, a real estate agent in here, someone who works in real estate. You can say, yeah, I want to have my real estate license. I want to be able to sell homes. Great. What did you do? Who did you become? Did you have to show up to things, right? Did you have to actually take some courses and learn something, right? Everything I'm trying to tell you guys, everything that you've done that's worth a damn in your life to this point, you've worked for it and you've actually got the thing now, but you're forgetting that process in trading. I'm making an assumption. I think my assumption is true for almost everyone here. You're forgetting that the things you've done in your life to get you the things you have, right, was the whole reason why you have those things in the first place. It's the things you've done and the person you are. All of you here, I assume, brush your teeth, right? Maybe make your bed, right? Eat food. Now, you don't wake up, right, every day and say, I don't want to have cavities. I don't want to have cavities. I don't want to lose all my teeth. And maybe you do. Maybe you're paranoid about that. But what you do is so simple, right? It's an action. It's something that you do, and it's something that is a part of you. It's a part of your being that keeps your teeth healthy. It's just brushing your teeth. You don't have to worry about not having teeth. You don't have to worry about, all of these huge ramifications of, poor dental hygiene, because all you do is you wake up and you brush your teeth, or you make your bed, or you eat a meal, or you do something that's so habitual that you don't even think about it. Now I want you to make that comparison for trading, right? The comparison is the exact same. I know it seems insane. I know it seems out there, but the comparison is the exact same. Right now, you're equivalently in trading saying, right, I want to make a lot of money, or I don't want to lose all my money. I don't want to lose all my money. I don't want to lose my teeth, right? I want to make all my money. I want to have healthy teeth. Okay. Well, then the equivalent of brushing your teeth, which is an action that you do right now, is the same thing you can do in the trading world. Something you do to get something that you will one day have. Okay? I know I beat the horse kind of dead with that one, but it's such a fundamental shift in your psychological thinking. And I want you guys to go home, and if you watch this lecture, I want you to really reflect on something that you've done in your life. And I want you to think of what you have now because of it. I know a lot of you guys here are professionals, right? A lot of you guys here have jobs, have degrees, you have families, you have kids, okay? You always wanted to have these things. But I bet you, and in your heart of hearts, that while you were fucking getting them, it wasn't about those haves or have-nots. It was about what you did to get there. And it was who you became, right? You want to have children, but you have to become someone like a father or a mother. You have to do the things that provide for your kids. It's not just about having kids. That's something you want. But what does that really take as a person? Once you become the person who can do all those things, well, then when you have the kids, you probably have a good relationship with them, right? You have all that beautiful, family that you always wanted, but it didn't just come from a thought like, hey, I want to have kids. And the people who think like that don't make great parents, right? People who just say, hey, I want to have kids, let's have some kids. That's not good. No, it's the people who say, how do I have to be, right? How do I have to act to be able to take care of my family? Okay, well, you probably, get a financial security net. You probably make sure that you can afford to have children and, live in an area where you can send them to schools and all sorts of stuff. But you do all these things that have nothing to do with the outcome. You do it all to become a better person who's prepared for that outcome. Now I want you to do that same thing in trading. You want to have money. You want to be a profitable trader. So wake up every damn day and instead of saying, what don't I have? And then don't especially think, what will I do and be once I have the money? Like some people really, and like I've heard this a lot. Some people say like, and I've heard it so many times, once I get my promotion, right? Like I'm gonna actually enjoy this job a bit more. Right now, like I have friends who work in investment banking and consulting and they're like, oh yeah, I'm just like a band 6, like low level. I just like take shit all day and I hate it. Once I get my promotion and I have more money, it'll be worth it all. And I'm like, so what you're saying is that right now, while you're working your job for the foreseeable, for the next couple years, every part of your life and all the happiness and everything that you're deriving your entire sense of worth for is all going to be based on what you have in 2 years from now? What are you working towards now? Oh, I'm working towards that promotion. And I'm like, okay, so you want the promotion, obviously, because it's going to give you this better life. So what are you doing? And when you ask people that, they're just like, well, I don't know, right? Like, I don't know, like, well, how do I get that promotion? And then you ask them, like, well, it's going to change your life so profoundly. Like, what are you doing besides eating shit in the moment to get yourself to that position? And they sometimes don't even have a response. They're like, oh, I'm just waiting, after a couple of years they'll promote me. What if instead of saying, once I get the promotion, I'll be happier, once I get this thing, my life will be better, saying, well, what do I need to do right now, right, to be in a position that when I complete all these tasks and become the type of person who deserves getting promoted, how will I be? Like, how will my life change in some productive way? And you'll often realize that once you start making all those changes, the thing that you want just comes, right? It's why when you chase money, it runs away from you. But when you provide service or value, money just flows in, right? Like, I never started this Discord service to make money. What I did was I started this Discord service to provide value. So instead of saying I want to have a Discord that makes me a certain amount of money, what I said was that I want to be an educator who provides real value, because an educator who provides real value and does, right, like give a quality service, well, that person should make good money doing it. And just the same as I treated trading, I treat the same thing with my business, which is, Discord and teaching. I've never done it with the intention first of saying, what do I want to have at the end of this? It's always like, what can I do and who can I be so that people trust me with not only their time, but their money? Because it's not about what I will have at the end. It's about whether I become the person who's deserving of all that shit that I want. And once that switch clicks, and in my mind, once I can put into action those behaviors, like for me, it was something like for the Discord, right? It was like, well, I need to build a good team and I need to have, trust with my students and with my analysts, and I need to be providing value in lessons, and I need to have new students have a way to learn from older ones, and I need to have a funnel to be able to show people what I'm teaching. And it didn't start with, I want a lot of followers on something. It just said, what can I do and who can I be so that I can provide value to the most people? And that's how I grew my business. From the thought process, right, of what can I do, not just what will I have or how can I get it. So I want you guys all over the weekend, right? It's Friday, take some time off the charts. I want you to think of something unrelated in your life to trading, because you'll see it's so transferable. And I want you to really focus on how you can frame this thing that you're chasing and this goal of some material or other thing that you want to have in terms of the steps it takes to get there. And I'll give you a really simple example of one of mine right now. So one of my current goals right now is to sleep a bit more. Like for me, I want to get more sleep. So instead of just saying, I need to sleep more, right? I need to have a better sleep. What I'm doing is I'm actively starting to prioritize things that I can do that will help me get better sleep in the long term so I have a better sleep. Such as not drinking coffee after 6 p.m., which is something I used to do all the time, right? Also, turning my computer to it's simple stuff. Turning my computer to a red light at a certain hour, using all those settings. Trying to read a bit before bed and not scroll on TikTok. Just really simple things that almost have nothing to do with my I want to have, in the end, a better sleep schedule. It's just, what does that person do? That person who wants to have a better sleep probably isn't scrolling on TikTok on their phone, right? Simple stuff like that. It's something I want to have, and what am I doing, and who am I becoming? Okay, so in your life, think of one thing not related to trading. A lot of people choose fitness because I think fitness is one of the best examples, and it's probably one of the most universal experiences of everyone saying yeah, I want to have the best body. Great, dude. You and every single other person in the world want to have a great body. Every single one, wants that. Who gets it? Have you not noticed? I mean, you guys can all relate to this before I head off. Everyone here have a friend who's super into fitness? Do you notice how after they get super into their fitness journey, they could care less about their gains anymore, what they look like. They are so deeply entrenched in their habits that it's absurd. I have some fitness friends who started off being I want to get jacked because I'm going to Mexico. And now their routine and their habits are their whole framework for why they do it. I have a buddy, his name is Mohammed, and he wanted to get jacked for a Mexico trip on his 4th year, and he was in 3rd year at university. And dude, it's been 5 years now, and guy's in the best shape of his life, and you ask him so now you have the abs, you have the muscle, how do you keep it up? You got everything you wanted. And he's like, I don't give a shit what I look like. I feel better than ever. For him, it's not about what he has. He has everything. He has it all. He has all the muscles, all the gains, he looks amazing, everything he wanted to have. And now he's I just do these things because I'm a fit person. I am a fit person. That's who he is. That's his being. And he does things that a fit person does. And the consequence of that is obviously, the muscles and the abs and everything he once wanted to have. And you'll see that people can relate to that story a lot of chasing. And this is why people say you have to learn to the process and the journey more than, the destination itself. Because the destination itself is the have. For me, I wanted to make and have money day trading. But realistically, the thing that motivates me these days is you guys, my community, the habits and skills I have of learning on the charts. They keep me equally as motivated because it's my process. That's just who I am. Afiz is going to do a certain set of things and be a certain type of person, and the outcomes is going to be money from trading. And once you become more you fall in love with kind of your discipline and your habits and just who you are, you have that self-love for what you do, right? Again, remember going back to the lecture, do and be, what you do every day and who you really are and how you feel about yourself, the things you have are just going to come, and you're not going to care about them. The money, the significance of the money will fade, but your passion because of what you do is going to grow. And that's why you'll all have success. Because I promise you, if you guys are chasing a certain number, a certain dollar figure, you guys have all experienced it. How good does that thing that you really wanted to have really feel after a couple months? I mean, everyone wanted the new iPhone. Maybe you wanted a new gadget. Maybe you were playing a sport and you wanted, the newest technology in that sport. How good does that thing really feel after a couple weeks, couple months? Be honest with yourself. How many times you guys had something that you wanted so badly and you put on such a pedestal and it was the envy of your entire admiration, and then when you get it, it's just a thing you have. But compare that to something you've worked for. And I don't know what that is for each of you. There's a lot of people in here. I don't know what that is for each of you, but something you've cultivated yourself. For me, what that is this Discord and my community. I grew that myself. I feel so close to that process and that journey that no matter how much money it makes me, I don't care. If I was to make 5 times more or 2 times less, right? Half or 5 times more, it doesn't matter. Getting to show up and work on something that I've built and I've put my heart and soul into means so much more than the thing that I have now. Because people would say, oh, you have a community with a certain number of members and you have this money and you have money from trading. But it's like, no. I have these things because I've been a certain way and I've done certain things. And the value of that doesn't go away. No one can take that away from you. Which is why I say when you learn this skill, if you can't fall in love with the highs and the lows, if you can't fall in love with the ups and the downs, it's going to be a depressing journey. You have to be okay and accept that becoming a profitable day trader is going to be associated with a lot of have-nots. Like, you have not passed a challenge yet. You have not gotten a payout yet. You have not made $1,000, $10,000, $100,000. You have not, but you are doing, right? It's not what you have or have not. It's what you do, because I promise you, you do the things that will eventually build with momentum, you'll get what you want. It's very rare in life that people who work hard and have really good systems don't get exactly what they want. It's very rare. I'm gonna say it again, that if you follow through on this idea of being a certain way and doing a certain set of things, the haves will come. And you can apply this to any part of your life, right? It will come, and you have to trust me that it will come. And it might not come at your timeline, because your timeline isn't always the right one, or it's not always the realistic one, or, right, it's just not the one for you. But keep doing, keep being, right? Keep acting in a certain way, and I promise you, I would bet on your stock. Like, I would buy into your stock. If you showed me, guys, like, I have all my students do something called a scorecard. I started with my student Eddie, and it was like, every day I want you to send me your scorecard. Did you revenge trade? Did you overtrade? Did you follow your risk management? Did you follow your trading plan? And if they say yes, I followed all the rules, in my mind, I know, like, there's no difference between me and him, me and her. Like, me and my student do the same things. We act the same ways. What do you think the outcome is going to be? You're telling me that if you show up and you do exactly what you know you need to do every day, you're not going to get there? That's bullshit. You will. But it's so hard to put aside that have and have not mentality. It's impossible, right? Unless you think like this. Because all you're going to see is like, yeah, okay, I followed all my rules today and I lost money. And you followed all your rules today and you made money. And I don't have money today. And what does that do to your psychology? You did everything right. How many people here, right, have felt good, right, when they broke all their rules and made money? Right? We make excuses and then we're like, oh, well, at least I ended up green, right? I broke all my rules. I did everything wrong. Overtraded, revenge traded. I looked like, just if you looked at like a video of me while trading, I was like teeth chattering, full port, over leverage. Oh, but I made money. I survived. So I did something good, because what I did that day resulted in me having something that I wanted. But what I did that day and what the behaviors and actions actually were, long term, I'll never have what I want. Remember, if you don't act in a way and become a person who deserves the thing that you want to have, you'll never have it. You show up every day, you study, you backtest, you come to lessons, you add to my students, you come to your one-on-ones, you ask questions, you become, right, a good, prepared, vigilant student, you'll do well. But if you just trade to make money, break your rules, over leverage, pass some evals, blow some evals, you'll get nothing out of the mentorship. It's the students who make no money for months and months and months and months and months, and then it all is like, boom. They just did their process, showed up, failed, learned, failed again, learned some more, failed, right? And then eventually, process, right? Opportunity meets timing, and boom, they're profitable. And they wouldn't be able to tell you what that aha moment was. There wasn't one. It was just, I became the type of person who makes money in the market. So I want you every single day to ask yourself, are you the type of person who makes money in the market? Not asking you, did you make money today? Okay, So what that can look like in terms of tangible stuff, this is a lot of talking, I know. But this is one of the most important things I could ever tell you, is that you need to keep track of your behaviors. Keep track of what you do, not just on the charts, but in your life. How do you act? How do you behave? What are your actions and what are your thoughts? Because your thoughts control your actions become habits, your habits become your character, and your character becomes your entire life. Okay? It all starts here. Your thoughts manifest as real things you do. What you do becomes who you are. Who you are becomes your entire set of habits and characteristic. And that characteristic is what's going to determine if you're profitable or not. But it all starts in the brain with what you're thinking. Remember, an action with ill thought means nothing. An action, right, for you could be placing a trade. But if you're not thinking about what that trade means, the action of placing that trade could be building a habit and a characteristic that's detrimental. Revenge trading, scar tissue from overtrading, revenge trading, hesitation when you shouldn't have hesitation, because your thoughts controlled that action. So change your thoughts to what would a profitable trader do? Then act in a way a profitable trader would act, right? Then behave over a series of actions in a set of behaviors or habits of profitable traders. And then by doing and by being, you will have what a profitable trader has. There's nothing else to it, right? Favorite quote, right? Watch your thoughts become your actions. Watch your actions become your habits. Watch your habits because your habits form your character, and watch your character because that determines everything in your life. Your characteristics are you. You're nothing more than those habits. Whether or not you achieve everything you want to in life, or you blame the circumstance, you procrastinate, the world is out to get you, whether you do it all or you do none of it, it all starts with who you are and what you do, not what you have. There's been people with nothing who have gotten everything, and there's been people with everything who have lost it all and become nothing. You don't need to have to do. It's a lie you tell yourself, and it's a lie I told myself. Once I have my PA, I'll act a certain way. Bullshit. I didn't do it. I didn't act a certain way once I had my PA. I just lost a lot of money, tens of thousands of dollars, right? Oh, once I have this money, I'll be able to pay off my debt. My debt just kept getting worse. It's only once I did something and I was a type of person who didn't leverage credit card debt to buy challenges and YOLO, full port Apex challenges, that I actually became someone who could pay off their debt and who became someone who could make money. So start with thought and then action those thoughts for the right reasons. And I don't care about the outcome and what the haves and have-nots are. You show up every day, you keep a scorecard, right? Take inventory of what you're doing and what you're not doing, and you show me over, you can send it to me in DMs. Even if you're not my student. If you're not my student, right? If you still want to DM me your scorecard on the daily, do it. Just send me a DM. I'll give you a response. Like, I'll give you a thumbs up if I see it. And I want you to put down, did I follow my rules? Did I trade for my edge? Did I follow my risk management? Did I overtrade? Did I revenge trade? And over the days, look and see how many times, right, you put the things that you should be doing and you put the things that you shouldn't be doing. And watch how, as the ratio of good days to bad days changes, you change. Because your actions become your habits, and your habits become your character, and your character becomes you. Profitable trader Ellis, profitable trader Mo, profitable trader Sponge, right? That becomes you. But right now, it's just, what do I have and what don't I have? Yeah, there we go. There we go. This is one of my favorite quotes, right? I kind of butchered a part of it, I think. I butchered the character becomes your destiny. I said your character becomes you, but it's the same thing, right? It's the same thing. And this is the idea of, starting with that do and be and trusting the haves will come. And if you don't want to listen to me, right? If you don't take heed to this lecture, well, keep thinking in terms of your haves and have-nots. And tell me, right, realistically, what the hell that's ever gotten you. Has it ever gotten you what you wanted to have by just saying, oh, I want it so badly, I need to have it, if I have this, it all changes? Bullshit. Do something about it. Be someone about it. And yeah, good things happen to people who do and be. It's just opportunity and timing. And when they meet, you'll have everything you want. Okay, 3-hour lecture, some TA stuff.